What's up, YouTube? Silver Dragons here. I'm joined with Lior Gantz, founder of wealthresearchgroup.com. Lior's been calling $30 silver ever since it was under 12 bucks. So what do you make of everything that's going on right now with the silver squeeze and all that stuff?
I think, first of all, silver is a very unique precious metal because a quarter of the United States population, the baby boomers, are they're very fascinated with silver over the years. In 1971, when the gold window closed, silver started to rally. In the middle of the 70s and towards the end of the 70s, two oil tycoons, billionaires, the Hunt brothers, they loaned $3 billion at very low credit rates or very low interest rates, and they actually also persuaded a lot of other billionaires and oil tycoons to basically buy every ounce of silver that they could get their hands on. At one point, at the peak of their buying spree, they owned about 1/3 of the global supply of silver, and they warehoused the whole thing. It got to a point where silver rallied so much that the government had to intervene. And they basically, with everything that went on with Robinhood restricting, buying GameStop and AMC and 34 other stocks, and they only allowed you to sell them. Well, the government intervened back in the 70s, and they didn't allow long contracts, only short contracts. And then they told the Hunt brothers to unwind their position. So when it comes to a commodity, the government tends to intervene. And so baby boomers remember this very succinctly. And whenever there is the notion that silver can be squeezed or cornered or whatever you want to call it, they're loyal to what they believe is a rigged market. Silver's story regarding rigging and manipulation and price suppression boils down to the notion that particularly JP Morgan, but other bullion banks as well that have a stake in the COMEX, are either spoofing investors by creating what's called a level 2 or level 3 buy and sell orders, where if you want to buy, they would put a phantom order in to show you that they're going to dump a big load, and they basically scare you out of buying because they basically kind of manipulate it into thinking the price is going to fall. And on the flip side, whenever they want to do the opposite, then they show you that you should not sell now because there's a lack of supply in the market, and you should be strong with your hands. And they have, for 10 years, the CFTC has been on them until about a year and a half ago, if I'm not mistaken, they were fined $960 million for doing this. And so there's been a lot of data regarding how the silver market is being, I would say just manipulated would be the best. It's not the legal term, but that's basically what's happening, spoofing. And so you've got that, and then you've got on top of that a very concentrated short position on the COMEX. So it's not that the short position on silver is naked short or there's like a crazy amount of short, but it is very concentrated within about 8 to 12 big short positions. So that's the idea, that the shorts are concentrated. There's not a whole lot of them. There are just 8 to 12 entities that have the majority of the short position. And then you couple that with what's really not a silver phenomenon at all. It's a phenomenon that happens with all of these commodities, that there are so much more available supply of contracts, derivatives, futures, and ETFs than there is real physical supply. That's not a silver story. That's every commodity, and that's basically your ATM story as well. So if everyone goes to the ATM right now and tries to withdraw their savings or from your banks, etc., those paper currencies don't exist in that physical paper form. It just doesn't exist that way. It's all leveraged. And so one of the ideas is if everyone just buys 2 or 3 ounces of silver across the planet, then there will be no silver, and that's true. But it doesn't mean that that will happen, and it's very hard to achieve. And in the last few days, if you call any of the bullion dealers, they'll tell you they're out. They you need to wait like 3-4 weeks, etc., etc. And that's what's going on right now. But I don't think that can impact the price of silver on the paper contracts that much, because what you saw in the last few days is actually a lot of profit taking. For every inflow and record inflows into these ETFs, there's so much selling right now because silver is up 48% in January, basically, until the last 2 days that it's corrected this hard. And from March of 2020, since the bottom, it's up about 150%. So there are a lot of people taking profits. I think this is very healthy for it to correct down this hard in the past 2 days. And I am not, I don't own silver because of the potential to squeeze the physical supply. That's not why I own it. There's a really good case for silver to be just on the early innings of a structural supercycle bull market that could last for a few years, and its price can go much higher. I'd love to talk to you about that. But my main message is just that this type of environment where you rush to the bullion dealer, try to buy physical supply when the premiums are this high, just tame your spirits. It's going to come down. You don't have to pay these huge premiums. If you think you're underweight in physical silver, just have a little patience here, because this thing is not running to it's not going to the moon tomorrow. There's time you can buy physical silver, and I'd love to talk about why it's going much higher in the coming years.
Yeah, so Lior, with the whole silver squeeze, basically you're saying as retail investors, we can go buy out all of the bullion, the coins and the 10-ounce bars and whatever, but we're never going to actually make a dent in the massive supply of silver. Like on the COMEX, so, no. They have the 1,000-ounce silver bars, and we're not even touching that. And so it's really not going to do that much to the price, which is what we saw. And in your opinion, there's still much more to come for silver. This squeeze is just basically a short-term thing. And now that it's effectively over, we can look forward to what silver really is and why it will actually go up in price.
Yes, I 100%. And I would also say that, don't ever get caught up in this kind of situation again, because as you can see, if the government believes that this is somehow a cornering or a collusion or something else, they will come in, because this is a commodity. It's not a stock. This is fundamentally important to thousands and thousands of industrial cases for silver. It's just not something that they would just let fly if they deemed it not to be organic, not about pure supply and demand.
So just to be sort of the devil's advocate here, I don't think that people could actually drive the price up like the Hunt brothers did, because they put all these sort of limits and things like that. But what if we all went out and started buying silver futures and then tried to take physical delivery? Is that even possible? Could we drive up the price that way?
It is possible, but they'll just settle with you in cash, and they can do all sorts of restrictions. After the JP Morgan case, they changed a lot of the rules. The CFTC did for the COMEX. So just so you know, they don't even have to prove that you have an intent to corner the market. They can just assume that you do. Tell you, hey, we think that you don't have the right idea in mind when you're buying the silver, and so we will not allow it. There's all sorts of restrictions that they can put on you. They are very powerful with their new regulations. And so I would say, no, that's not the real reason that silver has a lot of backwind to it. There are really fundamental global trends in motion that have started since March of 2020 that are the real reason why silver's price will go much higher. And we wrote about this. If you go to wealthresearchgroup.com/gold playbook, it's a very comprehensive download report about everything that's going on with gold and silver and what we're covering here just in more detail.
So real quick, before we get into all of the reasons silver could go higher, the Reddit group, on Wall Street Bets, they were talking about driving silver from 25 up to 1,000. Now, their strategy was basically to buy AG and SLV. Do you think, well, first of all, AG, that's just First Majestic Silver stock, so that wouldn't really have anything to do with the price at all, unless they're just trying to squeeze, the shorts in that stock and get that particular stock to go up, but that won't affect silver price. What about SLV? If they all pile in on SLV because they did, and we saw lots of inflow, would that have any effect on the price of silver?
Well, I did some calculations on that. It's impossible, basically. So no, they wouldn't. They couldn't do that.
But if enough people did buy SLV, would that move the price up eventually?
It would. Yes, it would, and that's what would drive the price higher. But it's not because of the Reddit group that would do it, and it's not because of a one-day event. There is a real case for why demand for silver is going higher and why supply is going lower. The COMEX they have a mandate. It's not they don't operate outside of regulations as much as people would like to believe. They don't have these prerogatives to do whatever they want, and it's not that much about these the leverage. The leverage, when you talk about like the leverage on these ETFs and the leverage on the longs and the short, for every long there's a short. These derivatives and the futures, what they attempt to do, in theory, is to create a better market so that there aren't no supply deficits for Apple, for example, when they need silver for their for their tablets and their iPhones, and so that when the photography industry needs silver, it has enough there. And it's also to help miners secure the price that they're going to sell into the market. The paper contracts are not built with the idea in mind to suppress the price of silver. They can be abused to do that, but that's not the framework that they're built in. So for silver to keep going higher, as it is already doing, so it was down to 11.99 on March 23rd, 2020, and it's now more than double that, and it even reached back in August, and again late in January it reached almost 30 an ounce. So on the physical, on the paper contracts, it has more to go. And what I'm telling you is there was so much profit taking in the last few days on the paper contracts that this is a great sign that this is not euphoria, this is not hysteria, this is not 2011, this is not the end, this is not the peak for the price. This is just speculators getting out and creating a new base from which silver's price can continue higher, and it will, in my opinion.
Okay. So now that we have the whole squeeze out of the way and all this craziness, let's come back down to reality. What is going to be the catalyst? What is going to drive silver higher? I know you've been looking forward to this, Lior, so go for it.
Okay. One of the underlying themes that is important is that for the past 11 years, if you look at budgets for exploration, for development, and for production and M&A activity, which is mergers and acquisitions activity in the resource space, it's been basically damaged badly by the fact that venture capitalists and institutional money have flowed predominantly into tech. And so when you look at the capital expenditures for the natural resources industry, it's been in a phenomenal decline. We have neglected to think that in order for Apple, Tesla, all of these hardware companies that produce major amounts of modern day products for us, they need minerals. And so except for, get this, except for cacao and zinc, all of the other commodities in the world are in a supply deficit, an annual supply deficit. We are already operating in uncharted territory for commodities. That's the first thing. Secondly, the pandemic has basically broken the assumption that the global supply chain can work without interruption. Because if you think about it, Caleb, to really create what globalization has done, where you can source from around the world, from the best regions, you can source whatever you want for the lowest price and it gets to you on time. It's a phenomenal, delicate system, but what we saw with the coronavirus has basically shattered the idea that that is sustainable. And so every country right now is trying to act like it's an arms race. We need to shore up our reserves. We need to make things local. It's not just America and not just Biden and Trump. They're saying, let's make in America. Let's manufacture in America. It's China. It's Europe. It's Japan. Every country is looking to be independent. We are at peak globalization when it comes to natural resources. And that's really important because obviously countries are not fighting for the best price anymore, but they're fighting for being independent and making resources, mining them within your own jurisdiction may not be the most economically sound idea. Some countries, they have a lot of regulations, a lot of ESG restrictions on and regulations and how you need to keep the environment safe and how to help the community, the mining community, etc. And I'm telling you, prices of commodities are going higher because of all of this. In our opinion, Wealth Research Group, in our newsletter, if you follow our newsletter, you will see that oil, when it reached negative prices on the option expiry date in April 2020, that's when we called the bottom for the commodities bear market that started in 2009. To us, this is the last year, the last 8 months basically, is just the starting gun for this new commodities super cycle. And I just told you two major themes. One is the neglect in the last 11 years in capital expenditures. 2, ESG restrictions. 3, supply chain redistribution in terms of like moving things back home. Okay. 4, you have all of these redistribution of wealth ideas and policies where the government is trying to give the lower income and the working class direct deposits via, you want to call it stimulus checks, you want to call it extended unemployment, you want to call it universal basic income, it doesn't matter. What they're doing basically is taking money and giving it to the people that are not going to spend it into the stock market. This is not QE. These people are going to spend it into the economy. And therefore, when you think about inflation being 1.5% today, it's going to be about 2.5% in less than a year or two. It's a big change. It's a 60% appreciation in inflation prices. And that is really a key component of commodity prices. Then you have to think about the fact that labor costs are going higher with 15%, with $15 minimum wage. I don't know if you know this, but for a loaf of bread, for example, if a loaf of bread costs $1, the grains, like the wheat component, is about 8 cents. That's it. The labor is about 60 cents of a loaf of bread that costs $1. The labor component is most of the expense in the Western world, specifically in a service economy like the United States. So when you raise the minimum wage across the board, you're basically raising prices for everything, and you're going to see that. So that's another thing that's important. The next component of this is the fact that the U.S. dollar is getting weaker because of the emergence of these more dependent emerging markets that have now seen in March 2020, they've seen how badly it can damage their economy if the dollar rises too fast and too high, because that's what happened in March. So they're thinking, how can we divest out of the US dollar? They're selling dollars into the market. They're trying to strengthen their own currencies. And that is really a key component, because every commodity in the world is priced in US dollars. It's quoted in US dollars and not something else. So when the US dollar depreciates against a basket of fiat currencies, that's really important. And if you look at the correlation between the US dollar and silver, it's much more inversely correlated than the US dollar and gold. Gold and the dollar can rally in tandem, can fall in tandem. They have big, long periods where they trade directly with each other and not inversely. Silver and the dollar trade inversely. So if I'm telling you that a dollar bear market has begun, that's really bullish for silver. Now, where can silver prices go, and if that's the case?
Yeah, what's the top here? Because a lot of people are thinking, okay, $50 an ounce. We saw that in 2011. With inflation back to the 80s, we saw the Hunt brothers. It went up to what, $100 or $200 an ounce if you adjust for inflation now. So
Okay.
What's the top here, Lior? I mean, how high can silver go?
Okay, so in that regard, I don't think that your best way to look at this is with a price target. And we cover this a lot in our newsletter. We don't look at a nominal price target. That's not the way to judge when silver will peak. You need to really think about what other events are happening in the world and what other prices are happening in the global asset universe in order to figure out when silver is close to a peak, because it doesn't operate in a vacuum. Silver is a commodity at the end of the day, and a precious metal if you assign that designation to it and buy it for investment purposes. Okay, so about 20% of the usage of silver is bullion or investment demand. 50% is industrial demand. And the other 30 is jewelry and other sort of niche elements of it. What I'm telling you is, don't look at silver and say silver is going to 60 or 70 or 80 or whatever. It's not the way to look at it. You can look at technical analysis charts and make all sorts of predictions. I think your best way of looking at it is to say, is to live and breathe the market and say, okay, right now, with everything that's going on, this is what I think the peak looks like, and I should either sell, it depends on your strategy, or just not buy anymore. So that's the whole debate regarding commodities. Commodities are very cyclical. So what do you do at the top? What do you do when silver reaches that peak price and starts to go bust again? Do you sell? Do you take profits? Are you a loyal silver hoarder and you do nothing? What is your exit strategy with silver? And so I think what's really important for people who want to invest in silver for appreciation is to understand that they need to look at how are they invested. Are they invested in physical? Are they invested in leverage ETFs? Are they invested in the miners? Are they invested in, what are they invested in? What is their strategy? For me, I have my physical ounces that I don't intend to ever sell. Those are basically savings replacements. To me, when I have additional savings power and I want to divest it out of fiat currencies, I put it either into physical gold, physical silver, or other alternatives that I deem as wealth preservers. I don't intend to sell them, and when I buy them is after big corrections. So for example, after the last 2 days, when silver went from 30 to about 26 as we're doing this interview, this would be a great time to say, okay, let me put some more of my savings into silver. That is one strategy. And with that strategy, my idea is to have about 1 year worth of living expenses in physical silver. So for example, if my living expenses as a family unit with my wife and my daughter is to make this easy is $10,000 a month, then I want to have $120,000 in physical silver for the rest of my life. And if my burn rate goes from 10,000 to 15,000, then I need to adjust it accordingly. That is one strategy. The second strategy is how to go in and out and make a profit. And I think for people that want to do that, the physical silver is not where they want to be. They want to be in the miners, because the miners will trade at such a steep leverage to the underlying commodity price in a bull market. It's easy to figure it out this way. Let's say silver today is 25 and you think it has the potential to go to 50. Well, that would mean that you'll make 100% on any physical coin that you own, and that's fine. For miners who mine at about $15 an ounce and sell for 25, that means that their profit margin is $10. Now, if silver goes from 25 to 50 and they remain around that 15% range, let's say oil prices go higher, so it's $20, then you sell it at 50, it costs you 20 to do, you're making $30. You used to make 10, you're making 30, your profits are up 200% or 3x, and therefore the underlying company, company's shares have the potential to rally much more than 100%, much more than 100%. So I think you need to devise a strategy if you're a silver bull, and to understand, one, I want physical silver in order to save, not to make money, because I'm not gonna sell it, right? And I want to find the best mining companies in order to make a profit from this. And that's how I see this. I see this as a two-pronged strategy, and that's what we focus on basically in our newsletter as well, to divest between the two strategies, basically, if that makes sense.
Yeah. So if people aren't looking at a specific price target for silver to say, okay, it hit 100, it's now at its peak, or whatever it peaks at, how long do you think the bull run could go? I mean, one thing that people are looking at is, Biden was just elected and he wants to go green energy and more solar panels and electric cars and all these things. And so this is going to increase industrial demand for silver for at least 4 years. So, I mean, are you thinking it's going to be at least another 4-year bull run or a decade, or how long could this go for?
Well, first of all, remember, I would rather live and breathe the market than than build a script in my mind for how long this would last. But in a general sense, it's going to last for years. These things don't just end abruptly and don't just start abruptly. We have neglected, as a global economy, we've neglected the mining industry for a long time. It takes a year to a year and a half for institutional money to say, you know what, we're underinvested in commodities. We need to start putting money into mining and natural resources, etc. This takes a while, and then even after that, it takes a while to put new mines into production and go from a deficit to a surplus. So this is years and years. One way to look at it, Caleb, is a typical dollar bull market lasts between 8 to 10 years. We've just finished a 10-year bull market in the dollar. So can it even last a decade? It sure can, because the dollar has started a bear market since March of 2020, and we're not even 1 year into it. These are long trends that are happening right now. In the 70s, it was one decade, right? In the 2000 until 2011, it was 11 years. This has a long time. Another key important thing is you and I'm 36, you're even younger than myself. We're millennials, and now Generation Z has become aware of silver because of what happened with Reddit. This is a whole new generation, about 100 million people in total, that have now started to understand what are precious metals, what are they important for, especially when you say that these angles with green energy, silver is important for It's deemed a green energy, a green metal. So these generations that are obsessed with green energy and clean energy are going to also understand that silver is important that way. And believe me, when they start to understand that most of silver is not mined directly, but is mined as a byproduct of lead and copper and zinc and gold, they would really understand the risk reward potential with silver. So I think there's a long way to go. I don't want to put a specific time or date or price target because it's just not the way to look at it. The one thing I would say is look at the gold silver ratio to compress even further. If it's 65 to 1 now, I would say that I will not be raising my voice that silver is looking like it's going to peak unless it goes below 45 to 1. So we have a very long time for this silver bull market, in my opinion.
Awesome. Well, Lior, as always, you are a wealth of knowledge. Again, founder of wealthresearchgroup.com. Anything you want to add here as we finish up?
No, I'm good.
Awesome. Well, thanks again for coming on, and we'll be happy to talk to you again in the future.
Thank you very much.